Most traders believe the opportunity appears when a session opens. Asia establishes structure, Europe reacts. New York drives volatility. That explanation sounds logical. But this chart shows something different. Some of the most important interaction does not appear during a session. It appears between sessions. When one session anchor has already formed and the next session anchor has not appeared yet, the market often enters a narrow structural corridor. Inside that corridor, volatility can remain active, but distance expansion often slows. Continuation attempts stall faster. Pullbacks deepen before stabilizing. Tolerance becomes narrow. Reaction speed increases. That is the environment this chart is currently processing. The structure begins with the March 6th U.S. session anchor. That anchor did not form an empty space. It formed directly on top of the March 3rd Asia session anchor region. Instead of relocating structure, the market repeated the same positional area. When session anchors overlap like this, structural density increases. Price then remained close to the lower boundary of the March 6th U.S. session box. It did not move far away from it. That proximity kept the earlier session anchor active inside the structure. Continuation becomes less clean in this type of environment. Distance becomes selective. Reaction speed becomes more important. The next important shift came from the March 8th Asia session anchor. That anchor formed between the midpoint of the March 3rd U.S. session box and the midpoint of the March 1st Asia session box. So it also formed inside prior structural memory, not outside it. That means the market was not entering new territory. It was negotiating inherited structure. Inherited structure behaves differently. Continuation attempts often fade quickly. Pullbacks deepen before stabilizing. Distance expectations contract even while volatility appears active. From that March 8th Asia anchor, price later interacted with two important references: the upper boundary of the March 3rd U.S. session anchor and the lower boundary of the March 6th U.S. session anchor. Those two boundaries sit close enough to create friction. So the market was not moving through open space. It was interacting inside remembered structure. That is where the between-session corridor becomes visible. When one anchor is already established and the next anchor has not fully taken control yet, price interacts inside a narrow corridor of structural memory. That corridor can remain active, but it rarely behaves like clean expansion. Not immediately. The upper boundary of the March 8th Asia session box becomes the first local release point from this containment. If interaction persists above that Asia boundary, the next structural reference becomes the upper boundary of the March 6th U.S. session anchor box. If persistence fails, the lower boundary of the March 8th Asia box remains structurally relevant because the corridor has not fully released its compression. So the chart begins revealing an idea. The market is not waiting for the next session open. It is already processing pressure between the anchors. The 20 Bollinger Bands support that reading. Both upper and lower bands are sloping upward. The broader hourly structure is leaning higher. But slope alone does not remove friction inside overlap, because the 4 Bollinger Bands expanded earlier and are now beginning to compress. That combination often produces exactly this type of environment. Volatility remains visible, but usable distance becomes narrower. Execution conditions remain tight. The market is active, but the corridor between anchors is compressing distance. The next structural development comes from the March 9th U.S. session anchor. That anchor formed almost exactly on top of the March 6th U.S. session anchor. This is not simple proximity. It is complete overlap. Complete overlap intensifies structural memory. Instead of creating a new working area, the market inherited the previous one. After that March 9th U.S. anchor formed, price continued interacting inside that same U.S. session box. That matters, because the structure did not abandon the earlier anchor. It continued processing inside it. The box kept receiving interaction. It kept receiving acceptance tests. It kept defining the working environment. That is a compression condition. And compression conditions matter more than candle speed. The next layer came from the March 9th Asia session anchor. That anchor formed near the midpoint of the March 9th U.S. session box. Now several anchors occupy nearly the same positional region. The March 3rd Asia anchor. The March 6th U.S. anchor. The March 9th U.S. anchor. The March 9th Asia anchor. When session anchors cluster like this, the chart creates a structural processing zone. Inside that zone, volatility can remain active. But distance expansion becomes more difficult. Continuation attempts stall faster. Pullbacks deepen before stabilizing. Tolerance becomes narrow. Reaction speed increases. That is why the between-session environment becomes important. The opportunity does not appear because a session opened. It appears because overlapping anchors compressed structure before the next session began. The upper boundary of the March 8th Asia session box becomes the immediate release level for this corridor. Below that boundary, price remains inside overlap. Above that boundary, the structure begins interacting with the upper boundary of the March 6th U.S. session anchor box. But the path remains conditional. Because tolerance inside overlap is narrow, continuation can hesitate. Pullbacks can deepen. Small acceptance failures become more meaningful. That is the friction created by overlapping anchors. The chart is not offering open territory. It is offering a corridor. If persistence forms above the March 8th Asia upper boundary, interaction can begin stretching toward the upper boundary of the March 6th U.S. session box. If persistence fails and price returns into the Asia box, the overlap zone resumes control and rotation continues. The lower boundary of the March 8th Asia box remains the containment floor of this corridor. Above it, the corridor remains active. Below it, the attempted displacement loses continuity and compression resumes. The Bollinger structure helps confirm the environment. The 20 Bollinger Bands continue sloping upward. That means the broader hourly container still leans higher. The market is not processing inside a flat structure. But the 4 Bollinger Bands tell a different short-cycle story. They expanded earlier. Now they are beginning to compress. Expansion followed by compression often changes the environment. Distance printing slows. Tolerance testing begins. That is exactly what we see here. Persistence is being tested inside overlapping session anchors. The market repeatedly returns to the same region. March 3rd Asia anchor. March 6th U.S. anchor. March 9th U.S. anchor. March 9th Asia anchor. This repeated occupancy creates structural weight. A single anchor can define containment. But multiple anchors in the same region make that containment harder to escape. Continuation attempts require more persistence. Pullbacks deepen before stabilizing. Holding pressure increases. Tolerance narrows. That is why the corridor between the March 8th Asia upper boundary and the March 6th U.S. upper boundary matters. It is not only a distance corridor, it is a persistence test. If compression continues between these anchors, interaction can keep rotating inside the corridor while the next session inherits unresolved pressure. If displacement begins persisting above the March 8th Asia boundary, the field can begin stretching toward the upper boundary of the March 6th U.S. anchor box. If pullbacks return through the March 8th Asia box and fail to hold above its lower boundary, overlap regains control and the corridor compresses again. Execution conditions remain in transition.